All right, good morning, everybody. Hopefully you guys can see my screen here. Let me make sure it's coming through. Good. All right, so this is harder than you would think, streaming on YouTube. I've got to connect a bunch of pieces of software because YouTube Live does not support screen sharing. So I think I've got it pretty dialed in. I'm trying to get the image even sharper. I got to adjust the settings a little bit. I'll try that next time. But can everybody see the charts? Is the audio clear? Let me know if we have any issues before we get started. I don't want there to be any lag or bad audio or anything like that as we get going. Everything good? All right. Perfect. Thank you, guys. And if we type this in there, for any reason everyone doesn't see, and it's still showing up, you'll just hit refresh and we'll be good to go. But all right, let's go ahead and dive in. Appreciate everyone being here. Now, if you would do me a favor, we're going to try to get this thing going. Hit the like button there if you would on the video. Let YouTube know we're doing something of value and not wasting everybody's time. And I am watching the comments, so please fire away. Tickers, you want to look at them. I'm going to take all of your stocks. We'll look at those in a few minutes here. But what I want to focus on first is putting together a watch list of where we want to focus our efforts. So if you missed it, Powell spoke Thursday at the Jackson Hole Symposium. Basically came out very hawkish, meaning he thinks we should be cutting rates finally. So pretty much guaranteed at least a 25 basis point rate cut in September, potentially 50, which would be huge. But we are turning the page finally after 3 years of waiting and promises, 2 cuts in interest rates. And as most of you probably know, lower rates typically leads to higher stock prices. It is good for the growth of the economy. It allows stock valuations to rise since the rates you're getting from bonds and fixed interest instruments is much lower and less competitive. And that's the Fed's tool, right? When they think things are getting overcooked and there's massive inflation, they raise rates to get you to shrink stock valuations, to get less spending, less borrowing. And when rates come down, you're more inclined to build a new house or a business or expand or take whatever. So it's always, there's an inverse correlation. Lower rates, higher stock price, and vice versa. And so after that Thursday session, look what we got on Friday here. Just huge up day in the markets, ripping to new all-time highs. The Russell 2000, which is the small cap index, 4% broke out of this range we've been in since essentially March. The Dow had a really strong day as well, up 1.94%, which is really strong for the boring Dow 30 stock. So everything looking good in our direction. And this is one of those times when you have a strong market, you've got a strong economy, you've got a really pro-jobs, pro-business, anti-regulation administration in the White House, and we have expectations of rate cuts. So this is a great market. And even I put in my Friday email, a lot of folks been called in the last few weeks. I think the top is in. It's time to get short. Even fantastic traders who I respect, I just don't see it. And I'll run through why I don't see it really quickly. But one of the things I like to look at is something known as the net new highs. And all this does is look at how many stocks each day made a new 52-week high versus how many made a new 52-week low. If more stocks made a high for the year than a low, it's going to be green and vice versa. And so when you get into a nasty bear market like we had here in February and March, it's pretty much all red. If we go back here to 2022's bear market, you can see that the bulk of the time in here were spent making more stocks making lows than highs. And that's just not good. If more stocks are going down than up, we don't want to be involved. But that is not the case now. And other than maybe 1 or 2 days, I guess 1 day here in August and 2 back here in May, we've been seeing steady net new highs. So not only is the market going up, but it's not just being dragged up by Google, Nvidia, Microsoft, Amazon, Tesla, and the Big 10. which now make up 38% of the index, by the way. But it's healthy beneath the surface. There's broad participation, and that's what you want in a really strong stock market. Now, the other thing I like to look at is the advanced decline line. And this is really important. I think a lot of people miss this. The advanced decline line does essentially what I just showed you on the net new highs. So if it had, although it's not looking at highs, just looking at up or down, it's how many stocks advanced today divided by how many declined. So if more are going up than down, it's a positive number. And it just adds that to the reading of the day before. And what you'll find is when you have a divergence between the advanced decline line on the bottom in yellow and the index, like the S&P 500 on top, it is telling you something. Now, this is late April 2025. So the market sells off with the tariffs, right? And look here, May 1st, how the advanced decline line was back making new highs. You see that? It was up at new highs long before the market. That means it is very, very healthy. And so the odds this is going to continue a bull market are very strong, and it's exactly what happened. The opposite can also be true. This is a big warning sign back in 2022 when coming at the end of the bull market here. So this is, let's go way back. This is the COVID sell-off over here on the far left. It comes back. And look here how the advanced decline line made a new high before the market. That was very bullish, and it led to an extremely strong bull market through the rest of 20 and 2021. But look what happened at the end there. Now, again, this is June 2021 to Jan 2022. So notice on the bottom, the advanced decline line made no progress, yet stocks were advancing higher. And so what that's telling you is the advance in the index was being led not by all 500 stocks, but by a small percentage of them. Remember, the index is market cap weighted, meaning the bigger the company, the more weight it has on the index. As of this week, 38% of the S&P 500 index, which is the market's 500 largest stocks, is driven by 10 names: NVIDIA, Google, Apple, Microsoft, Tesla, and the Big 10. So what was happening here is those Big 10 were driving higher, leading people to think the market was healthy, but in fact it wasn't. And that, of course, led to, or forecasted, I should say, the 2022 bear market. So I tell you all of that to say things are very strong now. Advanced decline line has been up here making new highs. It is powering in advance, so we've got advanced decline looking good. We've got net new highs printing higher. And we have on the bottom here, this is interest rates. And if any of this is over your head, just ignore it. I'm going to make this real simple in about 3 minutes. We've got the NASDAQ. We have the federal funds rate. We have the 10-year bond rate. But look here at the bottom. This is the most important interest rate when it comes to gauging the stock market. This is the high yield index effective rate. And the ticker for this is right there. I'll type it into the chat if you want to put this in your trading view. Index effective rate. And what this does, it is interest with risk involved, okay? When you're looking at the federal funds rate, that's the rate in yellow there where banks lend to one another, that's pretty much guaranteed, right? The 10-year bond yield at 4.2%. If you buy a 10-year bond from the United States federal government, you're going to get your money back. It is backed by the full faith and credit of the United States government, which has the power to tax you and me and the rest of our citizens. They're going to pay you. If they have to pump inflation to infinity, they're going to pay you. So there's no risk involved. The bottom is the high yield rate. And this is the rate banks charge to lend to riskier businesses. So I don't mean like pawn shops, but, businesses where it's not guaranteed. You lend money to some AI startup or some semiconductor manufacturer or a restaurant chain, there's a possibility you don't get paid back. There's a possibility they go out of business, default, and you don't get paid. So this rate has to include that risk. And what you'll notice is, and this is if you look over here, I'm looking at the green one, by the way, February, March, April. What was going on here? The tariffs, right? Suddenly Trump declared trade war on the world. It was an uncertain economic situation. And so there was a lot more risk. And if I'm a big bank lending money to companies going, oh, well, now these goods that you sell might be facing a 30, a 50, a 200% tariff. Now your business just got a lot riskier. I'm going to have to charge you a higher rate to compensate for that. So that lets you know an amount of risk. So when this is declining and it continues to decline, currently it's 6.6, again, that shows a very bullish outlook on the economy, on the business sector, and it's another bullish symbol. So between a declining high yield rate, a climbing and making new highs advanced decline line, a steady stream of net new highs, and in fact, we had a huge gust of them here, a whopping 286 on Friday, and a stock market breaking out to new highs once again. Everything to me says get long, be aggressive, buy leading stocks. Now, there's going to be another black swan event. There's going to be another bear market. But right now, the stage is set to profit. The conditions are healthy. This is when you want to be stepping on the gas to making money. The advanced decline line is an indicator. Yes, so if you go to indicators, this one is called accumulation distribution line, created by this guy, Everget. So just put it on like an index chart, Tyler. All right, so questions about this, MRK and BBWI, absolutely, we'll cover those, Curtis. Is everything good here? I'll get some more Alabamians. Ava, welcome. We're going to dive in. I just want to be sure everyone understands what we've covered here so far. SoFi, yeah, we'll look at some of those. Goldman, Katie, no problem. Everything good. All right. And again, hit the like button on this video if you haven't already. We're going to try to juice this YouTube algorithm. I don't quite know how it works, but we'll see. All right, good. Montrose, Mac, welcome. All right, good to go. So, where's the strength in the market? Now, remember, institutions are what drive stock prices. Despite what we like to believe, it is not you and me and our friends down the road, okay? It is endowment funds, it is hedge funds, it is pension funds, ETFs, mutual funds, the big heavy hitters. And wherever they're putting money is going to go up, right? If they're all buying a stock, it's going to go up. They're all selling, it's going to go down, period, end of story, whether they're right or wrong. So the most important piece of information we can have is where are they buying? What areas are Goldman and BlackRock and the New York City Pension Fund, where are they bullish on? Because when they're buying a stock, they do so every day, every week for months. It takes them a long time to build positions. And so if we can see where the money is flowing, we then know where to put our bucket. We know where to focus on. There's no sense trying to find a needle in a haystack. There's no sense if biotech stocks are all getting hammered. I don't want to find the 1 out of 700 that's going to break out. I'm going to go find where it's raining and put my bucket there. If I know they're bullish on solar and they're driving solar stocks higher, I've got a hell of a better chance of making money focusing on solar stocks. And for the last couple of years, it was AI. That's where most of the money was flowing. And that's why it was NVIDIA and Supermicro Computer and AMD and all those names that made the big gains. So the way we look at where the money is flowing is simply tracking which ETFs, which sectors or subsectors are rising the fastest. All right? And if they're all buying a certain group, certain stocks, those are going to rise to the market faster than others. So what we want to do is see which areas are strong. Now, April and May and June, it was nuclear, it was crypto. Those were the really strong areas. And we focused on those areas to buy stocks like OKLO, which is a nuclear stock, right here as it was coming out of our just go-to breakout pattern. And we bought right in here and made huge gains. We did the same thing with SMR, which is another nuclear stock that, again, came down, shallowed, tightened up, broke out beautifully, bought here at 18, and it surged to 52. And these are the kind of gains you can make by focusing on where the money is and getting in early. So what we want to do is see which areas are rising in the ranks. And looking at these charts, what do you see showing a lot of strength right now? Is there a theme you're starting to see? And to me, and we've made this abundantly clear for the last month or so, we are beginning to see money flow into the building sector. There's home builders, building products, more home builders on the 2-month list, building products on the 2-month list, building products and home builders now both on the 3-month list. In fact, building products also on the 6-month list. And all this does, this indicator, it looks at 40 different sector ETFs. And I've got a full list of it over here. I'll show you what these look like just so you know, in case anybody wants to screenshot this. But it just looks at this list of different ETFs. So ITA, for example, is an exchange-traded fund that holds aerospace and defense stocks. KBE holds Wells Fargo and JP Morgan and all the banking stocks. This is building products, clean energy, commodities, crypto, energy, food and beverage, etc. And so it just tracks all of these to see which ones are moving the most. And by doing this, it allows us to really hone in on where the strength is. And so clearly seeing a move to construction, that makes sense. We got rates going lower. That could lead to a housing boom. We've got a lot of people in we call golden handcuffs stuck in their home with a 2.8 or 3 or 3.25% mortgage who for the last 4 years have gone, well, hell, I'm not selling this thing. I'm not trading my 3% note for a 7% one. That's crazy. I can't afford to do it if I wanted to. And so now with mortgages at about 6.5%, expected to go down to around 5.5%, potentially 5% in 2026, you're going to see a lot of folks come off the sidelines, and a lot of you in this room that applies to. They'll say, all right, well, at 5%, I'd probably do it, but I'm not going to give up my 3% or 3.5% mortgage for a 7% mortgage. And so we're seeing money flow into there. In fact, when we look at the stocks Buffett bought last quarter, his 13F was just released last week. These are the stocks he added. So he sold out here at the bottom of Charter and T-Mobile and some other bonehead moves he made. He loves these old dinosaur stocks. But look where he added money in. He bought Lennar, which is a building materials company, a home builder. He bought Pool Corp, which, of course, builds pools, and that tends to be something you do more in a new house. There's a little bit in Nucor, a little bit in Constellation. He added United Health. That's a big value play. Added Lamar, which is a real estate investment trust. Allegion, another home building construction stock. And so he's showing the same big picture view in the market. He's betting on the housing boom. And, you know, Buffett is no spring chicken anymore, but he's still a pretty sharp guy. So this is an area we want to focus on. We're also starting to see some movement in solar. And if you look up here, you got solar in the top 4 out of 40. You got solar number 1 on the 2-month list, number 3 on the 3-month list. And this is odd because if you know about the big, beautiful bill, you know, one of the things it did was remove the subsidies, the government subsidies from these stocks. And you'd think that would crash them, but that is not the case. And what you'll find, and I've been doing this for around 21 years, you'll learn it soon enough, is that the market always knows first. I don't know if this is because of tariffs with China and now the U.S. solar panels are going to be more competitive and these companies are going to do well. I don't know if there's some new technology or R&D development that's going to make this massively cheaper and more cost-effective. I don't know what it is, but there's money flowing into solar energy. So these are the areas right now I really want to laser focus on. And what we're going to do is kind of dive through some of these stocks and see which ones of them might be good buying opportunities. All right. Now, really quickly, we do these throughout. We do these every week. I've just heard they're playing ads on this. Let me see if I can fix that. I don't know if I can or not. Hold on. All right, I just turned the ad delay on for 10 minutes. Hopefully that turns them off. Sorry, I'm still figuring this stuff out. Anyway, we do these every single week. If you guys want to join us, we give you a handful of, like this indicator, for example, the industry strength. We give this to all of our members. This market timing model, the market health gauge, is included for our members. We have live weekly sessions. We have several bonuses and things. So if you want to join us, I'm going to put a link down here in the bottom to join Traders Agency. It's like $5 if you'd like to join for an entire year. But I'm going to put that link in here. Actually, Dare, if you could do this, I'll do it. I think the link is tradewithross.com, but check that out if you're not a member, and you can join us. It's $5, easiest decision you'll ever make. All right, or don't. I don't care, but it's $5, and you'll get a lot of value out of it. All right, so let's dive into some of these areas. So I've got some watch lists built here. This is my construction watch list. It's all the home building stocks and the building material stocks. These are really easy to build. Just Google the ETFs. All their holdings are public. You can see all the stocks they own and with what weights, and just add them to a list, which is what I've done. And then that way it's a lot easier to go through because there's 8,000 publicly traded stocks. Most people out there are trying to find the needle in the haystack. They're going to these 7,000 stocks. They're getting a tip of something they saw on Instagram or X, or somebody told them about. There's no sense in doing that. Make your life a lot easier. Find the 2, 3, 4 top areas. Make a list of the top 20 stocks in each of those and just bang through those. You'll take the list of potential trade candidates from 7,000 down to 50. And it's the easiest way to go about it. So let's just dive into some of these and see what we can find. Now, there's a Legion. You can see it kind of broke out here. It's also breaking out from a flat base now. Looks very strong. AMWD up against the 200. Wouldn't be ready on that one. This actually looks pretty good. And we have this kind of go-to breakout pattern we use. I won't spend a lot of time on it today because most of you already know it. But if you're not familiar with this pattern, there's a video on my channel titled I Can Make Anyone a Profitable Trader. And I walk through this for like 15 minutes. It is so straightforward. You need to know how to do this. And it just looks for this big shallowing pattern where supply is being absorbed from the market and stocks are getting ready to break out. And it has to do with how the big institutions buy, how they shake out people's orders, run stops, manipulate the price, building these, and it kind of compresses. And historically, this pattern, especially coming off the lows, but also at the highs, leads to these big and fast moves higher. And so if we can find this, like Apogee, looks really good. A bit of supply from March, but again, you can see how this thing coming off the lows has now shallowed and pulled back and tightened and breaking out really nicely. This could be a really strong move from 45 into the 60s, potentially 70s or 80s. Our house to luxury furniture manufacturer, not the best chart. Top build is surging. BLDR looks pretty good. Beazer Homes, I took a position in this stock. As you can see there, it's the line on the chart. And this had what we call a shakeout move. And this can be really, really strong because again, the stock is consolidating, it's absorbing supply, it's tightening. And then as it's doing this, I'm expecting a breakout here, but what happens? It comes down. And if I had a stop loss here, it would have tagged it. If I had a stop loss here, it would have tagged it. And what they do, it comes down, and then immediately after running those stops, it just rips back higher. And that, again, is a really strong sign of strength. because it shows that when a discount is given, this can happen to fall on earnings, some people's news, the institutions, the ones who drive stocks, bought the hell out of it. And massive amount of strength coming to highs. One little bump retest, surged through here on Friday, set to gap open at new highs at 27. So really, really strong price action on this stock. Beazer Homes, one of my favorites here as far as viable stocks in this area. And there's really not much supply this year. Could easily get up here to 34, 35 and beyond. So you got a strong bull market. You got the leading group. You got a stock breaking out from this pattern. That's really the formula if you're trying to find these 20 and 40 and 80+% gains really quickly, right? If you want to find stocks you can hold for 2 or 3 or 4 years, there's lots of ways to do it. If you're trying to make money quickly, a few weeks, a couple months, just get those big, powerful gusts, this is how to do it. Carrier, air conditioners, nope, looks terrible. Century Communities is a home building stock. Yeah, it's coming up. I think there's better ones, but it does look pretty strong. CCL in here. Cavco, Dreamfinder. Again, I mean, just higher highs, higher lows. Relative strength at now 89%. DR Horton, wonderful uptrend. Just want to catch this one and ride it. Ethan Allen Interiors. So some of these, are ancillary. They're related to the construction sector, but they're kind of like a second tier play. So it's, there's going to be a big housing boom. Well, obviously DR Horton and the people who build houses are going to make more money. But that also means the companies who build sinks and faucets and sell drywall and flooring are going to do well. That also means people buying a new house, you know how it goes. You throw out a bunch of your furniture, you get new stuff. So there's companies like Ethan Allen. So this is an approach to find those stocks. Oh, he said that one's not clickable. Sorry. Oh, you put it in there. All right, thanks. I'm just trying to buy. Now, Eagle Materials looks really good here, EXP. And you can see what I've drawn out and how the stock has come in, and it was going lower and then tightening back up and tightening and tightening. And this big move yesterday into here, big uptick on volume. This looks really, really good. Breakout above really, here I think you could buy it above 242. And if you did that, I'd buy it here. I'd put a stop loss right here, so I'd be risking 7%. Everybody understand stop losses? What that means? A stop loss is just a sell stop order. And stop just means don't do it until it hits this price. So most people are familiar with market orders. If you just hit buy to the market, it's in. A stop order can be used either to get in or out. And so what a sell stop order says, and I'd put it like right in here, and so I'd buy the stock, right? If it hits 240, I'd buy the stock. I would then go in and put an order to sell those shares at a stop market order, and the stop price would be down here at 224. And so what that says is I want to buy the stock, I want to hold it no matter what, but if it comes down and hits 224, sell it immediately. I don't want a warning. I don't want you to text me. I don't want a ding-dong noise. I want you to sell the stock immediately because that's all I'm willing to risk. I was wrong. Something has changed. There's sellers. It should not go below there. And so what that means is we can buy these stocks on a breakout, which should have a realistic chance of going 20, 30% higher. And we can do so by just risking, in this case, about 7%. And so it's one of the reasons I like these to get really, really tight, because then I can put my stop beneath the swing low there. And you're never going to see me risking 20, 30% on a stock, ever. And this is a perfect example right here, Fortune Brands. We covered this one, I believe, last week, if not the week before. But you can see, this is a building products company. They had a whole bunch of brands. I don't know if it's Moen, but a lot of big building materials brands. But can you see this one, how clearly it just comes in and begins to shallow and tighten and compress? See how that works? And notice here, the breakout, you might have bought a little bit early here, but your stop loss would have been just beneath here. Right there beneath that swing low. And so you only need to risk, in this case, 5%. And if you bought it, you're up, what, 7% already, and probably about to be more when the market opens here in 60 seconds. But notice how it just exploded through. It pulled back, but look how it stopped right here at that breakout area, giving you a chance to buy the retest. So there's more ways to do this. I'm not saying I know everything, but this is what we've found and I've found to be the most productive, the lowest risk manner to get into these potential breakout moves. The last one, Apogee. Yeah, this was Apogee we were looking at. APOG. And I think this is strong. I think you could probably buy it right in here with the stop down here at 41. Trex seems to be setting up after a strengthened partnership. All right, Trex makes the decking boards, right? Yep, I agree. Trex looks great. Now, it's not an ideal perfect setup. It went a little high, but you're getting the same kind of thing, right? It got a little ahead of itself there, that area above this line. But for the most part, yeah, you're seeing the shallowing. It's coming in. Little final hook here. Yeah, I think it looks good. Looks good for a move higher. There's Pool Corp. That's what Buffett bought. Not the prettiest chart, but he's not a chart reader. He's a newspaper guy. I mean, Oshkosh, wow. Look at the trend on that. Doesn't get much prettier than that right there. This is one I would probably just buy it on any dip to the 10-day moving average or 20-day moving average and just ride it higher. Because as you can see, this is the 20-day moving average. Touches it. About a penny from touching it, right? Nice little, just buy the little dips to the trend line. So 2 ways to buy a stock: breakouts and pullbacks, or I guess there's a third, which is just cross your fingers and hope. But for me, it's breakouts and pullbacks. Breakouts look like this. And this is Lennar, the stock Buffett bought. And I'll turn the moving averages off. But the whole idea of this breakout pattern, this shallowing consolidation action, is that what it is showing you on the chart is institutional accumulation. When Buffett buys a stock, he doesn't just go hit market order 100 million shares. There's not 100 million for sale. He'd shoot the thing to $500 in 10 seconds. They have to methodically and over time build these positions. And when they do that, they're, sending a big sell order to spook the market. They're planting a story, and Buffett may not do this, but the big guys do. They're planting a story about how the home building sector's in trouble. They may have an analyst downgrade the stock. They'll, pull all these tricks, and all they're trying to do is create supply. They're shaking out buyers, and each time they do, they're buying it up. That's why it pulls back and then shoots up and pulls back and shoots up and shoots up. And we got confirmation in Buffett's most recent 13F filing, which I just showed you. That's here. That the biggest addition last quarter was this top line, Lennar Corp, where he bought 5,119,000 shares of this stock. Now, this stock trades on average about 1 or 2 million shares a day. He only likes to be about 20% of the volume. So he's buying a couple 100,000 shares every single day. This is the second quarter. This is when he did that buying, and this was what formed this pattern. So it all comes together when you start to look at this stuff, and it's nice seeing these 13Fs, which is the quarterly fund reports, that kind of confirm what you're seeing on the chart. Morning from Northeast Georgia. Good morning, T. Snow. Good to see you. LII, NBC. This looks really good. Mohawk, Power Trend and Mohawk. M&I Homes, also great. A lot of these looking real good. And you want to use these kind of weaker days to maybe buy some of these on dips or pullbacks. Toll Brothers, this was a monster back here in 22 and 23. The stock went from 40 to 160. And throughout that trend, you had several of these buying opportunities. So you had, off the lows, it wasn't perfect, but it was pretty clean, right? After the 2022 bear market, the stock comes down, shallows up, tightens nicely, breaks out and runs. It then, after moving about 30, 40%, comes in, tightens again, little shakeout, tight. There's your buy point. Whoops. Stock advances again. And then kind of peaks here. I would have been stopped out down in this region. Started another move. You see the flat base, the breakout area buy, and then it got a little squirrely there. And, of course, it fell apart in 2025 as rates didn't come down as promised. And then now it's based down here off the lows. Again, they're not all going to be perfect, but when you see enough of these, you'll know when it kind of has the DNA of these breakout moves. And so you get in here, you're risking probably 8 or 10% on the stock. And if you bought, you're up 20% in the last 2 months. And most of the fund managers on Wall Street would kill to be up 20% in a year on a stock. And so we're just trying to get in for the power move. I'm not trying to buy stocks I can hold for 14 years and eventually be proven right. I am dating these stocks. I'm not marrying them. it's as terrible as it sounds. I'm only here for the good times, okay? And when the fun times are over, we'll find someone else to date. That's terrible. I'm a married man. I love my wife. I got 2 kids. But you get the analogy. Okay. Let me answer some questions, and we'll go back and look at the solar stock. So fire away here. I'm going to kind of go through these. Oh, one other thing I forgot to tell you. If any of you guys have TradingView, want to get TradingView, they are having some kind of flash sale. I just got a pop-up today. Normally, they only do this once a year. It's the Black Friday sale. But they're having this little 7-day flash sale. You can get like 30, 40, up to 70% off, depending on the plan you choose. There is a free plan you can use. But the paid plan, just so you know, there's a few different options on these. Whoops, we didn't close that. But let me give you a link if you want to sign up. For me, I don't think you need the Primo plan. I use it because I do this for a living. But I think you just want kind of the base level plan. But anyway, if you guys are interested, I'll give you a link here. I think you might get an additional discount if you use my link. I don't know. You can go to the site, use the link I give you in there, either way. But anyway, that one should bring up that site. And you can see what you get with each one. So the premium stuff you probably don't need. But you want to have, like this lets you have 5 indicators per chart. You can see I've got 1, 2, 3, 4, 5, 6, 7, 8 on mine. This lets you have 10 indicators per chart, 4 charts per tab. You don't need all these indicators and all this crazy stuff. But if you wanted, I would either do the essential or the plus there. It'll bill it annually, give you a big discount. So it'll be, what is that, $120 or $200, depending which one you do. You get a year of it. Anyway, just an option, letting you guys know, because otherwise the big sale comes in November. Okay. All right, questions. Let me see here. What we got? I'll scroll back a bit. Do you consider dividends when selecting stocks? Franz, I do not. No, I'm not a dividend investor, especially when interest rates are at 3 and 4%. You're looking at getting dividends of 2, 3, 4%. Again, it's more of a long-term type strategy. If you're trying to hold stocks for 4, 5, 10 years, you want that consistent dividend and dividend growth, that's your back. I'm trying to hold a stock for 2 weeks, 2 months maybe. I'm probably not even going to hold it when it pays a dividend. And it's, again, if I'm trying to get 15, 20, 30% plus movement in the stock price, I don't really care about the 3% dividend. Could you show the multi-timeframe analysis, daily, 1 hour, 5 minutes, how to enter a trade? Yes. Let me find a good one and we'll do that. I swear Motley Fool plays the foolish advisor game. One article sounded not a good buy last week. Don't buy the dip. Than yesterday, better than... Yeah, Motley Fool's in the eyeball business. They're in the putting content out to get you to click on it business. And they'll accept content from fund managers and guys on Wall Street who are trying to build a position in SoundHound. And so here's an article on why SoundHound is terrible and not a good buy, and they try to get people to shake out of it so they can buy. Can you explain the other way around when big institutions sell? Do you have to do this methodically, or do they simply dump? But in this case, how do they manage the price not to fall dramatically? Philip, yeah, there's a scene in the movie, what is the movie about the '08 crisis? Margin Call, where the CEO of this big bank, Wall Street bank, comes in and says, guys, there's three ways you can make money. There's three things, you got to do one of three things to make money. He said, you can be smarter, you can cheat, or you can be first. He's like, we're not going to be smarter than every bank out there. I don't want to cheat. We're going to be first. And that's why the whole scene is like they dumped their entire portfolio in 2008 to try to be first to get out. They just dump. You're right. If they can sell slowly on the way up, they will. But if the stock starts rolling over, if there's bad news, there's an earnings miss or something bad, they're just going to dump it, and they're going to dump it hard. So far this morning, the index is down just a little bit, but holding their ground pretty well. Okay, other questions. Let me see. It's the other one. Unrelated to construction, LILA is in a slow grind, up 45% so far. Yeah, it sure is. I think we bought this as an insider stock once upon a time. It wouldn't have hit my radar. And listen, if I'm laser focused on what was nuclear and crypto, if it's AI, if I'm laser focused on construction and solar, like right now, I'm going to miss some stocks and other groups. And I'm okay with that. There's going to be some big, I'm not saying don't buy anything outside of this, but if you're in a position like I am, you're going, all right, there's 7,000 stocks. I want to find a focus list of 40, 50, 80, 100 of them. I want to laser focus on those where I know I've got the wind at my back. That's the reason I say to focus on those. Option on SLVR. Oh, I don't know. I mean, I would typically buy just like something that's 3 to 6 months out at or a little bit above the money. I'm looking for shallow breakout pattern. What time scale to use? So R&J, I am almost exclusively looking at daily charts. I'll give you an example where you can scale out. So this is gold, for example. And as you can see here on the daily, it is beginning to, and I'm surprised it hasn't broken out yet, coming in, so it's still kind of forming. It did the same thing back over in here. It did the same thing over in here. But this one had a multi-period setup, and that's why I was so bullish on it. Because if we go in here to early 2024, let me zoom in. You can see that, very similar to what it looks like today. Had a decent move up, showing there's institutional buying, begins the shallow, little shakeout move, but came right back and tightened up, and then broke out right here. But here's where this thing is going to, why this one is so strong. If you back up on a weekly chart, and we'll go to the exact same time period of that breakout there, notice here that you've got like this 5-year setup on the weekly. And somebody asked about multi-timeframe analysis. You can do this with daily, hourly, 5-minute. I'm going to show you daily, weekly, monthly, and this is rare. We'll make this one blue, okay? And you see, again, wasn't quite ready, but then finally begins to come in and shallow and break out. And it's a weekly chart. Each one of these candles is a week, covering 5 months or 5 years. And in this case, you step all the way out to a monthly chart. And we're going to look at the last 20 years of data. And hopefully you can see what I see on this chart, which is the exact same pattern, in this case on a monthly, over the last 20 years almost, of this big kind of shallowing pattern leading to a breakout around that, in this case, 192, which was about $2,000 an ounce in gold. So this is an example of multiple time frames, this big, monstrous, 15-year pattern lining up at the same time as this 5-year pattern, the big run-up in 2020, shallowing in the blue, and then zooming in even further to a daily where you had, and I guess I could go back even further with this and just kind of show it like this, right, in yellow. And all signs pointed to a breakout should this thing get through here at around 192, or again, it's about $2,000 an ounce. This is the ETF. You can look at the physical commodity. And here's what we've seen since then. So if you're trying to time, and listen, this is a commodity. It's gold. Gold tends to be cyclical. Moves in gold tend to last a few years instead of a few months like stocks. It is the world's oldest currency metal. It moves in these macro cycles. But when's the last time you had the chance to make 50% on gold in a year and a half? It's been a minute. And this lined everything up perfectly. And so somebody asked, and I'll see if we can find one here in a minute, but it's the same thing on stocks. If you had one where, for example, you had it setting up in a breakout on the daily chart. Let's take BZH. This is probably not going to work, but just in case it does. And then the breakout would have been, this one didn't even work. Well, let me find one that did work. Give me an example when it broke out real strong. Let's see if we can go back a little. Maybe Dreamfinder in here. I don't know. I should have researched this earlier, but Jan 27th. So if you then went into an hourly chart and you had kind of this similar formation here in the hourly, and then ideally at the open on, what is that, July 1st, if you had gone in on like a 5-minute chart, for example, I don't even know if I can go back that far. Yes, I can. And this one didn't really do it, but, for example, if the 5-minute chart was like this, you'd have the day traders buying the 5-minute breakout, you'd have the hourly chart for the momentum swing, you have the daily chart, and so all kind of lining up at one point. I'm not going to waste all y'all's time trying to find a perfect one, but you get the idea. Basically, what we saw in gold, but on like a daily, hourly, 5-minute or 15-minute, something like that. Okay, a lot of biotech opportunities setting up. Tyler says, when looking for the shallowing base breakout pattern, what times could, hourly chart, are levels the key to trading? What time frame do you use to chart? Again, I'm primarily looking at a daily chart. Now listen, you can, if you want to be a day trader, I think you can exploit the same anomaly, same pattern. If you want to be a big position trader, you can do the same thing like I just showed you on gold. But my sweet spot is kind of that swing trading, 3 weeks to maybe 3 months in positions, catching the meat of that move, whether it's 20 or 30% on a slower mover or on an SMR or an OKLO or a QUBT, like all these stocks we recommended to members and bought, by the way. I'm not Monday morning quarterbacking. Like, these are names either I bought or we bought with our members. These are explosive stocks. This is a quantum computing firm. It went up 136% in 32 days, and you did that without risking a lot of money. SMR, for example, the risk on this one, so from where we bought it to our stop loss, this little distance right here was about 11%. And on your 11% risk, you were up 96% in 16 days. You were up 140% in a month. You were up 180% in 2.5 months. So, I'll just go ahead and tell you, I sold the bulk of mine right in here. And you think, Ross, you moron, you could have helped. Well, that's true. I've sold a lot of stocks that ended up going higher. But if I can risk 10 and make 78, if I can make 8 times my risk on a money, an 8R move, I'm going to take it. I held a little bit. And then I think I sold the final piece like over in here when it began to pull back underneath the 21-day moving average. I might have sold I don't remember when I sold the final piece, but I don't look a gift horse in the mouth. I got profits on the table. I'm nailing them down. And that is my preferred method. I'm not saying it's the only way, but that's what I've done and what I'm trying to show you guys how to do. So if you prefer to value invest and find stocks at low price to book multiples that you can hold for 5 years, if it's working, stick to it. If you're a great day trader, stick to it. I'm not going to tell anybody to stop doing something that's making. I'm not telling you it's the only way. But we've had a lot of success with this method. Is MU setting up? Is it Micron? Yeah, it is. It looks early to me. But yes, you're seeing exactly right. I mean, Micron, it's got a big move off the April lows. In this case, 115% and 80. It's a powerful, powerful move. It pulled back a little bit, about 19%. And yes, if this would complete that pattern, if it would, come in and kind of tighten up and do something like that, absolutely. Absolutely, I'd buy the breakout here. I'd put a stop loss there. Rinse and repeat. It's a semiconductor stock, which is still strong. AI is still a big leading theme of the market. It's showing tremendous strength. It's got a relative strength rating of 85, meaning it is, in terms of price action over the last 12 months, it has outperformed 85% of stocks. It's got good sales growth. I mean, look at this over here. Earnings are growing at 200+% a quarter. Sales are growing. They were at 90. Now they're at 30 or so percent per quarter. Margins are maintaining. Everything looks good. Sure, absolutely. I just think it's early for me. But if you want to say, I'm trying to get in early on this thing, I'm going to try to jump the gun and buy off these moving averages, I'm not going to tell you that's wrong. How do you go about setting up the sector scanner you had? Is it a trading view indicator? Yes, this is a trading view indicator. We coded this up. Again, there's a link. Derek, Sean, if one of y'all put that Trade with Ross link in there, if you want to join our team, it's like $5. We do these every single, we have 2 live sessions a week. We send some picks. There's a bunch of bonuses in there, and we'll give you this indicator. We'll actually have a link set up for it. All you've got to do, I'll show it to you here. This is that page. So when you're a member, just come in, put your email and your TradingView username. We'll authorize you. And then you just come in and put TA industry strength. See, it's locked. We just make it for our members. It saves a whole bunch of headaches in terms of support. But yeah, I'll put that link in here. Especially if you guys who are already members, just fill that out. Oops, I forgot it. Let me put it in there again. Okay, doesn't seem to want to copy and paste for me. Control C, right? I'm not done, am I? All right, let's try it over here. There it is. That's the TA industry strength indicator. Yeah, that'll set that. And all I've done is I've had 4 of them on here. So you see, I set one up over the last 6 months of the best stocks, and I put it bottom right. I've set another one up for the best 3 months, and I've put it bottom center. And you can add up to 6 of these on the screen: 1, 2, 3, 6, 9, 12 months, as much as you want. To me, 1, 2, and 3 are the most important. 6 months shows a long-running trend there. What is your opinion on? Okay, got a lot of stocks. Let's see what you got. BNGL. Try to run through these. Tiny little buy. I mean, this is a penny stock. The market capitalization, see here, bottom right, $18 million. And just for reference, small cap stocks are those that are valued from $300 million to $2 billion. So this is roughly 1/15 of the minimum threshold of a small cap stock, to let you know how little it is. It trades $500,000 in total volume a day, so very, very thin. It's on a move now. I don't know what the news is. This is a very volatile penny stock. I'm not going to be any help to you on this one. Are these all going to be penny stocks? Yeah, I mean, I don't really specialize in penny stocks. They're too thin. I mean, look at this. You see this average? See this white right here? This average dollar volume. That takes how many shares trade each day on average by the price. This stock on average, total buying and selling in an entire market day is $51,000. I want to put more than that into a single position. So if I tried to buy this stock, I'd double it in five. They're just too thin. I can't work in these kind of stocks. If you're putting 500 or 1,000 bucks in, you can play Workhorse. I mean, absolute garbage stock. ACET. It looks early. It's trying. Maybe still very, very thin. The only one of those that has any weight is 4U's Energy Fuels. This is a $2 billion company. It is a nuclear stock, which is very strong. We pointed this one out a month ago for the breakout here. And you can see how perfect this pattern was. Just came in, tightened beautifully. Stop loss would have been right here. Buy would have been right there. You'd have risked, somewhere in the neighborhood of about 12, 13% on this stock. And you'd currently be sitting on a gain of 79%. So this was a nuclear stock. While it has fallen off the 1 and 2 month list, if you'd have looked at these in June, when this move started 2-3 months ago, nuclear and uranium, see it's on top of the 6 month list? It was on the top of the 3 month, it was on the top of the 2 month, and it was on the top of the 1 month list. So you had a bull market, you had advancing more net highs and lows, you had an advanced decline line, you had a market coming off the lows, you had a stock at a perfect breakout pattern in the right sector at the right time. Perfect example of how to make money. And the thing is, if you get into this stock, and look, I mean, you were up 50% in 2 weeks. If you're making 50, 60, 70, 80% on even a couple of these, you can chill when the markets are ugly. You can sit around on your hands for 3 weeks if you don't have a good setup. And that's why I harp on this. I'm like, this is a good environment. This is when you want to press on the gas. This is when you want to look for these, because these are kind of rare. There's going to be more opportunities. This thing it's kind of based out and is breaking out higher again. But like when you get a perfect pattern in the early stages of a bull market, like where we are now, in a leading group, in a top stock, like it doesn't get any better than that. You want to go in with both feet on these, especially when you can do so risking 8, 10, 12% on it. On a fire pattern, where do you usually put your stop loss? Generally below the low of phase 2 if I can. If that's too wide, I don't want to risk more than 15% on those, Philippe. This is Marvin. I don't know how to go long or short. So long means you're buying the stock, Marvin. Short means you're selling it short. Don't even worry about selling short. Even if you're good at it, most people don't make much money. It's only in a bear market. There's no sense messing around with shorting. The money's made on the long side. And if you know how to click buy, you know how to get long. That's all it means, long as you own the stock. What are the moving averages you use? So I only use a couple of them. I use the 20, 50, and 200 day. If I'm looking at really strong stocks, I'll include the 10-day as well. But yeah, 20, 50, and 200, all simple. The 200-day is the 200 and the 50 are the most important. It's a big institutional. I don't buy stocks under the 200, and you want it trending above the 50. The 20-day is usually a nice little pullback area on strong stocks. I used to use moving averages a lot more than I do now. One thing you'll notice about my charts, it kind of looks like a video game, doesn't it? Like you're used to probably seeing candles, right? And I use candles for a decade, more than a decade. And I finally come off of them and just go on these bar charts. And the reason is it's just one more thing to distract me. If I look at this chart, I instantly see, oh man, all those red bars, all those red days. I also see these candles in here, and maybe it's just me, but my brain, when I see this candle right here, focuses just on the meat of it, just on the body of that candle. And I subconsciously ignore the little wick at the top and bottom. I don't know why. Maybe my brain's weird, but I do. And that's not right. The stock did go there. It did go there. And I've seen people use these doji candles and shooting stars and island retracements and all this complete nonsense. I get it. It's appealing. It sounds cool to just memorize a couple of these A plus B equals C, but I've never seen anybody make any money with it. And so I just go to the bars because, one, it just simplifies it and I see the range very clearly. And second, in some ways, it almost does make it like a video game. And as odd as this sounds, you need to have a certain separation from the money if you're going to have any success. That's why, like on my trades, let's see, what's the stock I bought here? What do I own? Beazer Homes. So I'm up, whatever, $400, $500. I mean, this one hasn't done much. But notice on my chart here, let me blow this up. You see that little box over here to the side? I only want to see it in a percentage. Because if I see it in money, I start thinking about the money. Oh, I'm up $5,000. What could I do with that money? Oh man, I'm down $1,700. That's a car payment, or like whatever. But 2% is 2%. 4% is nothing. 8% is nothing. 30, 40% is significant. And so the saying is you want to trade the stock, not your capital. Trade the setup, whether you own 100 shares, 1,000 shares, or 10,000 shares. And so this just helps me do that. So anyway, that's my long rant on why I use one color bar charts. Interest in transportation stocks. FedEx, UPS, those aren't really movers. It's not my typical wheelhouse. I agree with you. FedEx looks like it's trying to set up in here. It is trying to come off the lows and tighten. It's a little early, but it is trying. But like even if you caught a breakout in FedEx, and let's say you rode it to all new time highs, you time this thing perfectly, it's a 25% gain. And it's going to take 3 to 6 months to make it. I don't like penny stocks. I'm not saying trade these nickel and dime biotechs, but like I want a stock that's got some movement. I want a stock that can move 4, 5, 6+% a day. So I would probably stay away from them. If I did trade it, I'd go bigger size. I'd do it with less risk. So I'd go in with, a 3 or 4% stop, and I'd take a massive position so that a 15 or 20% gain could actually mean something. Pause these ads again. Let's see. Zoom popped off in a big way. Oh, yeah. They must have had earnings. Yeah, they did. Yeah, they beat earnings estimates. They probably raised guidance, so it's up 12%. Not one I'd want to buy in here. It's just a bit extended. It's right here into the supply from May. It was a declining chart that boosted on earnings. It may go. I don't know, but not a setup for me. CGTX, Dana, fire your ticker as well. Take a look. Wow, what a monster. Yeah, this is huge. I mean, it's another penny stock. But man, it's some powerful momentum in there. Yeah, it's a big one. I mean, I wouldn't buy it here. It might keep going. It also might, take half your money when it dips tomorrow. I don't know. Yeah, a lot of you guys like these little tiny stocks. BMNR, yeah, that's just all over the place. Look at the corner. ADR is 14%. I mean, the average day from high to low is 14%. It's all over the place. This looks fun, making 3,000% in 11 days. But the odds are you got caught up in this and you lost 75% of it that day. So, it's not my bag, but if you want to ride these, I'd use something like the opening range breakout strategy. I got a video on that on the channel. If you want to see how that works, it's pretty straightforward. It's a way to, if you get a big gappy move, to ride that without risking the farm. Symbiotic, SYM. Yeah, this wouldn't be, it's not my favorite. It dipped to the 50-day moving average. It didn't bounce. It's holding. We have a thing we say we want to buy tennis balls and sell eggs. So a tennis ball pulls back and bounces. There's demand for it. whereas an egg just kind of splats. And, if you've got a stock that falls 33% in a couple of weeks, if there's institutional demand, if they're still buying it, they're going to take advantage and drive the price up. If they don't, it's not that good. Like if you go to a car dealership, right? And give me a popular car to start. Like I don't know. I always use G-Wagons, but like electric cars, a lot of these aren't selling very well. So they discount the price and discount the price and discount the price because nobody's buying them. But if you take a popular stock, or I don't know, like Yukons or Z71, pickups or something, they can sell. If they drop 10 grand off the price, they'd all sell in a day. That discount would bring buyers immediately. If the discount still isn't moving them, it's not in-demand merchandise. Stocks are no different. You want to think in terms of supply and demand, buyers and sellers. And just like houses or cars or stocks or Louis Vuitton purses, if they're in demand, there's going to be buyers, and they're going to take advantage of discounts. If no one is taking advantage of a discount, if a stock is offered at 50% off and still nobody wants it, it is garbage. Even if it's not garbage, even if it's a wonderful company, nobody's buying it. And if institutions are not buying the stock, it is not going to go up, period, hard stop, burn that into your head. If they want it, I want it. If they don't want it, I don't want it. Our job as investors and traders is not to guess or speculate or predict. Our job is to interpret. We know the big funds move stocks. We know when they're buying, it's going to go up. We know when they're selling, it's going to go down. So just follow the stocks they're buying. If they don't want it, and listen, I've gone through this, the stages of the stock cycle. I did a video on this. It's on my YouTube channel. Please watch it. It's the most valuable 15 minutes you'll ever watch. These are the stages of the stock cycle. This is what stocks do. This is what every growth stock goes through over and over and over again. And it all has to do with where the institutions are. The stocks get based, they get cheap, they bounce around as they're getting accumulated. They go into stage 2 where they're in demand and they're hot and they're growing and they're getting marked up. Institutions get out, they dump it in stage 3, it gets volatile and choppy and under the 50, and then it goes to the markdown phase where the institutions are out, retail panics, and it falls 50 to 80%, and it repeats this process again and again and again and again for the life of that stock. Go back and look at a chart of Amazon, Apple, Google, NVIDIA. Put it in logarithmic scale so you can see the percentage moves. You'll see tons of 50 and 60% declines over the last 20 years. It's going to happen to all of them. And you need to understand this, why it's important and what truly drives stock prices. When you do, you'll understand why this is not an appealing stock. Maybe it bounces. Maybe something changes. But right now, August 25th, 2025, nobody wants Symbotic stock. And even a discount cannot attract buyers. So for that reason, I don't want it. What parts of your chart setup does Thinkorswim can't provide? I guess Thinkorswim could do all of it. I just like TradingView. It's up to you. If you like TOS, I'm not a fan of the TOS charts. I know a lot of option traders love it. I don't like it, but this to me is just really clean. It's got a great mobile app. This is a desktop app. The alerts are great. I prefer it, but no, Thinkorswim can probably do all this stuff too. It's up to you. Taiwan Semi, TMSC. We'll finish up here soon. It's TSMC, isn't it? Nope. What's Taiwan Semi? TSM. Is that what you meant? Yeah, I mean, you can see the setup we drew here. This one was pretty late to the game, but it had a nice little breakout here from 200, but it didn't do it really off the lows. This one just about mimicked the index, lock, stock, and barrel. It's fine, but this is $1 trillion company. All right, so I know NVIDIA still doubled and tripled when it hit $1 trillion, but that's pretty damn rare. In fact, they're the only one that's ever done it in the history of the stock market. I've read a lot of investing books. None of them say, wait till the company's worth $1 trillion and then start buying. So not saying it's a bad stock, but I'm saying if you're looking for those 30, 50, 80% moves pretty quickly, you're going to have a lot more success focusing on the kind of mid to large cap stocks than you are these mega $1 trillion monsters. It just, the amount of buying it takes to generate a move this big in a stock, in a company this high value is massive. And so there's an 80% move. It took 3.5 months. You had to buy the low to the penny, which nobody did. You had to sell at the top, which nobody did. I mean, you've really got to time it well. In reality, you're going to be making these 15 to 20% moves over a couple of months in a stock like Taiwan Semi. Which part of the chart? Okay. Nike has that set up. Big Daddy Brown in the house. What's up, brother? Let's see. Nike. Yeah, Nike's getting there. Yes, it does. Good pull. Big Daddy with the name. Yes. Here we go. And that's his actual name. If you guys are watching this recording and can't see the comments, he's logged in as Big Daddy Brown. I'm not making his stuff up. Yeah, it looks good. So see, it's finally coming in here, starting to tighten. It looks really good. Now, again, this is Nike. Okay, it's not going to go up 600%. But, man, it's coming off the lows. This stock has been battered. I forgot the last couple of years. It could come back to this 150, 180. If it does, you do have a potential double. It's going to be 6 to 18 months to get it. But, yeah, I like Nike in here. It actually looks pretty good. RS rating up to 76. That's pretty good for a stock this far off its highs. All the moving, it's the 21 or the 20 day is pretty much holding this thing up. The 50 is, the 200 is turning up. The stock is what? 50% off the lows. It qualifies as stage 2. Absolutely. This is perfect. I think it's a really good pick. It's a bellwether stock. It's not going to fall 80% overnight. It's a good company in trouble. Yeah, looks good. Nice one. Very nice pick. I like this. At what percentage gain do you raise your stop? Mart, I like to, when I get up 2 to 3, generally 3 times my risk, I will, unless it just looks fantastically strong, raise my stop to break even and take partial profits. From there, I'll just stair step it up. So, like, for example, let's just take this stock, Nike. I mean, we didn't, but let's pretend we bought it, down in here for some unknown reason. If I was risking, in this case, I'm just making up numbers, 7%, then when it got up 14 to 20%, so let's say it got up right up in here, I would have probably sold half or a third, brought my stop loss up here to break even. And then as it rises, so each time it makes a new high, so here it broke that new high. When it does, I then raise my stop loss to beneath the most recent swing low. And as soon as the stock clears above 80, I would raise it up to here, or to here, or maybe to here. That's just the way I do it. Some folks like to trail on a percentage, but generally a good trending stock is going to kind of stair step its way up and make these runs and base and shallow and run and base. And so I just want to trail it behind them as it goes to give it the greatest chance of riding it up. You could absolutely get stopped out. It's not 100% guaranteed, but if you look at like big, if you want to catch a big mover like NVIDIA in the last couple of years in here, right? So let's say you bought NVIDIA down here early 2023. It comes in, didn't really tighten too much, but let's just say you bought it in there, the breakout, okay? You start getting up, it gaps higher over in here. I would take my stop loss and put it beneath the swing low right there, give it some room. When it broke higher, I'd come put it here beneath that swing low. I might have come in and tightened it here and got stopped out. Honestly, once I'm up a couple 100%, I'd probably give it a lot of room and let it just trail down in here. Now, once it breaks out there, you can come in and go a little tighter. It comes up, pulls back, runs, raise it to here. And, once you're up big, you're up a couple 100%, you can let it move 30, 40%, and raise it up to here. Pulls back, breaks the high here, I'm raising my stop to this swing low, probably this one, to be honest. When it breaks out up here, you may, raise it to this little swing. And eventually you get stopped out here at 115, but hell, you bought the thing at 20. So, you got the bulk of this move. You're out for a 477% gain. It's pretty solid. That's how I do it. It's lots of ways. Some of them gelled. I'll take a couple others and we'll end it here in a minute. Yeah, gel looks good. It's nice little rounded bottom here. Forestry products. What all do they make? I should know this. Interior and exterior doors, windows, related perfect building products, exactly what we want. Yeah, I think it looks really good. It's, I'd like it to tighten a little bit more, only because it's up so much here. I mean, it's up 70% in 2 months, but it is kind of absorbing these along the way. If this would get even stronger and I'd want to see it just like kind of absorb just for maybe a week, 2 weeks, because what I'm looking at is all this supply from February. Everyone who bought between Feb 18 and March 28, so for 6 weeks, all these buyers, that's, roughly what? 30 million or so shares. But all these people have been massively underwater. Their stock fell by 50%. And when they finally get the chance to get out at break even, a lot of them are going to do that and sell. So it creates this supply level in here. And I want to see it absorb that. It would just give me a lot more confirmation than break high. If it does that, yeah, I'm looking for a move to probably this $9 to $10 area. I think this could be a really good one. But yeah, great pick. I like it. You're doing exactly the right thing. I want information on leaps. Manuel, I'm not your guy. Leaps are ways to get lots of leverage, lose lots of money to time decay. I've never met a profitable leaps trader in my entire life. Merck, so we mentioned Hood. I'm going to look at Hood in a second. Merck, yeah, looks good. I wouldn't take it only because of the sector it's in. RFK Jr. is not the best friend of Big Pharma, thank God. I think these guys are all criminal. I don't like these stocks anyway. It is trying to come off the lows. This might be, a once-in-a-decade buying opportunity in Merck. So if you like these stocks, sure. I'm not going to take it because of the macro environment, because it's not a leading group, and because it is a $200 billion, pretty slow-moving stock. But if you like this stock, yes, I see what you're looking at here. I could get behind that for sure. Robinhood, yes, still strong. This has been an absolute leader of this bull market. It started in April. This stock has doubled off the lows. This is one I wanted to buy in here, and I didn't. I thought I was chasing it, and I wish I had, because I'd be up, to 25 or 30%. One little touch to the 50-day, or almost a touch to the 50, but still strong. I mean, it looks good. It's when I buy it. It doesn't have like a really strong setup right now, to me. But if I owned it, I would still be holding it. Does that make sense? Like everything looks healthy. I don't see a entry that says it's about to rocket higher, but there's nothing that says get out. It's holding the 50-day, was holding the 21-day, very strong. Markets are strong. They have crypto exposure. The younger generation, basically anybody younger than me, loves this platform. I hate it. I think it's garbage, but I guess I'm in the minority. Everyone else likes it. They've linked up with a big bank. They're offering banking products, which is going to really expand their base and what they can do. So, yeah, I mean, it looks good. With this thing in log scale, it looks a lot better. Hopefully, it kind of bases out here and gives you a breakout through that sort of 118 area. It's not perfect, but it is starting to kind of tighten up in here. But yeah, looks good. No problem. Oh, Martin, I think you got an auto paste. He posted, what platform do you use for trading stocks? All right, Martin, come down. He posted that question like 17 times. So I use Fidelity on my longer term accounts. What I've got linked here to TradingView is Interactive Brokers, IB, because it can link to TradingView. And that way I can just kind of trade right here on the chart. All right, see if we can pause Martin's ability to post. He's filling up the whole chat box here. All right. Sure thing, R&J, my bad. Interactive brokers for trading. Yeah, I like interactive brokers. I like it here. I'm not the biggest fan of their desktop platform. It's a little clunky to me, but man, linking it up to TradingView like this and trading just on this is super easy. I mean, your buy and sell buttons, you can make it a limit order or a stop order. You can see your positions down in here. Really, really easy to use. Oh, yeah, there's a link again if you haven't already. If y'all want to join us, we're going to do this every Monday. Also have a live session every Thursday with our one of our top analysts. Whoops. Yeah, let's cancel that. We got a couple of bonus reports with you. It'll give you access to our indicators. It's only $5, so click the link in the chat. You can join us for that. Where do you see the RS rating? Canada is another free indicator. If you go to indicators, what you're going to Google is this one. Look, Google RS rating, and it is made by Fred6724. It is a free indicator, and it shows this is calculated the same way Investors Business Daily does it, where it basically gauges the stock against the index or against other stocks. It front weights it looks at like last 1 month, 3 months, 6 months, and 12 months, and front weights the most recent month. So you get a pretty good idea of where the stock stands. All things being equal, I only want stocks 80 and above, ideally 90 and above, because I want the best of the best. I'm not dilly-dallying around with some BS stock that's being outperformed by half the market. Angel, I'm using the same strategy on IXHL. Okay, let's take a look at what you did here. Whoa, that's a mover, huh? Nothing like a 720% up day followed by a 60% decline. That's a little wild for me. But you said you were in this thing from 45 cents. Okay, so you probably went in like an hourly chart, I'm guessing. Let's see. Yeah, it's a little easier, maybe like a 30-minute chart. You know, this is kind of a bastardized version of what I've been showing you guys today. But, yeah, I mean, I can see the idea, right? This one isn't perfect, but, I mean, if it was, right, you get that kind of action here by the breakout at 45. I mean, if it's working, don't stop it. Don't let me talk you out of doing anything. But that's the only way I would trade these little tiny stocks like this is on a really, really short time frame, because that monster's all over the place. What are your thoughts on XRX? Is that Xerox? Yeah, it's not looking great. Technically, I know we had some insider buying in this stock, so we'll see how it plays out. This one can shock you. I mean, during COVID, they got a $760 million grant to start making hydroxychloroquine. The stock went up 2,000% in 2 days. So don't write the sucker off just yet. But from a technical institutional accumulation phase, no, it's not there. Whether the insiders know something, we will soon find out. OPEN, Open Door, kind of meme stocky. Yeah, I think you're a little late to the party on Open Door. This one, let me see if I can delete these. I had some alerts. This is a trade we did in that fire trade setup. It made the big move. Had a little consolidation in here. Bought there, and it's roughly doubled since. Yeah, look, it's a monster. Are the other meme stocks running too? Krispy Kreme's not. GoPro. This is the new wave of meme stocks. GoPro's still chilling. Open Door actually has some meat behind it. It just had a big short interest. I'm not going to tell you not to buy it. I'm not going to buy it here. To me, it's extended, but listen, this kind of momentum, it could absolutely keep going. This thing's up 1,000% since June. Nothing's impossible, but just look. I mean, it whips in both directions, all right? It can knock your head off. It's a 66% drop there. Be prepared. What do you think about Fibonacci? Nayland, I'm not a fan of it. I listen, I used to work at a company where guys love indicators. There's this woman, it works there now. I shouldn't even say this. On their Instagram, she's put this like short video to show her indicators, like called the double super secret squiggle. Like people love indicators. And the fact is you don't need them. Every single indicator is based on time, price, and volume. That's it. And so when you got guys, I love the ones that have like all the voodoo levels of these, and they got 20 damn horizontal lines across their chart. I'll see it bounced off the alpha wave. Like, well, hell, you got 20 lines in your chart. It's got to bounce off something. If you had one line in your chart and it bounced, that's significant. When you got 50 of them, that doesn't really tell me anything. So Fib's kind of the same way. Like, if you did a Fibonacci retracement, what's your level? Right? Where do I want? Is it the 61%, the 50, the 38? I've dumbed this one down. Most of them have a million more levels. So I am not a fan of it. I don't mean to dump on it. If it works, please keep using it. I've never seen it work. Practicing on the babies and playing a big boy. I love it. Angel, I love it. Good for you. All right. Look at a couple others. In phase. No, ENP's not. I don't know what this thing is. ENPH, maybe what you mean, although that does not look very good. There was a couple of solar stocks I looked at this morning. It looked decent. Here's one I'm keeping an eye on, Jinko Solar, JKS. The nice thing about the solar sector is it got so hot in 2020, we know where the big movers are. Like Jinko went from 20 to 90 in like a month. I mean, this is a monster. And if we look at the thing here, you can see it is kind of forming a base down here off the lows. So it has come in, you had, that little, I modeled this out. Here's the breakout right to resistance. So trying to come back in here, but you've got the entire year of resistance at like $25. If this thing breaks through, you could have a really strong move. So I'm watching Jinko Solar. First Solar, kind of, I don't like the dip. There's another one I liked. Hasi started to get there. Sunrun's getting legs. Solar Edge, this one, again, I mean, it's, you want to know why you don't buy stocks on the way down? This is why. Solar Edge went from $400 to $10. And this is a big company. So when you go, oh, look, it's on sale, it might get even salier, even cheaper, okay? But yeah, big stage one here. Watch that 4 stages of the stock cycle video. It'll open your eyes to this kind of stuff. As it comes out of the stage, it's finally beginning to run. And look, there's really no supply, nothing to slow this thing down until 50, 60, 70, $80 a share. You could easily see a double on this if solar stays hot and this stock runs. So watch some of these solars. Definitely watch the construction stocks. Here's one that's really on the move, ENLT. I mean, this thing's doubled since April. Now, solar wasn't hot at the time, so this is more of an outlier than I should have seen it. But now solar is firming up. We're seeing it up here, number 3 on the 1 month. It's number 1 on the 2 month. It's number 2 on the 3 month. Like the market is telling you, we're buying some solar. I don't know why, but they're buying solar. So focus on those stocks. Look for setups in that area. They're buying home builders. They're buying construction stocks. They're buying building materials. So look at those areas, okay? We've got several live trades in our various services. I've got this one in Beazer Homes I bought right in here. I'm only up like 2.5%. It's nothing. I'm just kind of letting it move. I'm targeting kind of a move here in like 33, 35-ish area. So, that would be 35 kind of percentage move. You got to know what you're trading. It's Beazer Homes. It's not, C3AI, right? But it's in the right sector. It had a nice shallowing pattern, had a shakeout move right here in August and has tightened up. So bought some stock. I don't have a lot of shares, 700 shares. It's no big deal. This is just kind of an account I've linked to this to trade live with our members. But one I'm looking at. I mean, some of these others we just focused on, like Jinko Solar. I think it'd be a great buy here through the $25 area. I'm going to be watching that one pretty closely. SHLS, this one. Shoot, you might be able to buy this one right here. Let's see, what do we got? A 12% risk. It's not the cleanest thing, but it is getting into new highs. It did have a nice big pocket of volume on the move. We see big volume on the moves up, dying volume on the pullback, bigger volume on the moves up, less volume on the retracements, and vice versa. So while this is not the prettiest pattern, goodness gracious, I hate the auto scaling. You could buy here, risk what? What do we have to risk on this thing? Oh, not risking that. 13%. That's a little higher than I like to go. Let's just see if it breaks out. Let's risk 10%, but stop at 590. I'll take a little position in this. We'll just see. I'm not going to buy a lot. Let's just buy, 1,000 shares or so. We'll see what this thing does. And what I do, and you can buy it in here. The nice thing about linking this up, you can go ahead and put your stop loss. Like we said, 590. So I'll put it like 589 just to be safe here. The time in force will make this good till canceled. And so I'm not risking a lot of money. $600 on this thing I'm risking. But we're buying early, hopefully an early stage breakout in a low price solar stock. Could make a big move. What's the bid ask on this thing? Let's just do a limit order. I don't want to get a bad fill. All right, so we're long at 656. We'll see what happens. The other nice thing on TradingView, if you link your broker to it, you can like drag and drop. So if you want to bring your stop down or bring it up, you can do it pretty quickly and just modify it like that. I'm going to give it a little bit of room and see. But if it starts ranking, if it starts really ripping today, I'll come put it here at the low of the day and just do what I showed you earlier. Just kind of trail the thing up as it goes. I'm risking about 10%. So I want to see 20 to 30 before I take any profits, which means, I'll be wanting to sell somewhere in this kind of 815-ish to 840-ish level before I'm taking profits. You can come in and preset a sell order to sell half or sell all when you get a start. I don't really do that, but you can. Again, don't take this as the Bible and put your entire life savings in it. Just kind of wanted to show you how I place orders here. But, it's got a lot of potential, and it could really make a big move. And if I can get away with risking 7, 8, 10% on these, even if I'm wrong 3 or 4 times, the one that works is going to double and offset that in a big way. I've got interactive brokers linked to it, DLab. There's a couple of options. Just click the little panel down there in the bottom, and it'll show you which ones you can link for opening accounts there. But hey, let's go ahead and shut it off here. We've been an hour and a half, so I'll go ahead and stop this. If you haven't already, hit the like button on this video. It'd mean a lot. I believe this is going to convert to a video you can rewatch here on YouTube. So if there's any section or thing we covered you want to go back and watch again, please feel free to do that. But we're going to kind of keep doing these every Monday. If you haven't already, click that link. It's $5. You can sign up for our membership. You can go to all of our live weekly sessions. You'll get some trade alerts from us, I think, once a month or so. There's a bunch of bonus reports, indicators you can get access to, and it's $5. So do it, don't. I don't really care, but it's $5, up to you. But anyway, thank you guys for joining us. Hope you had a good time here and learned a lot, and I'll see you next Monday, same time.